I ranked the top stocks to trade right now, and 3 of them are separated from the rest. Let's get into this. So the first one I'm going to look at is Visa. Visa is very clearly making all-time highs right now. Now, what's interesting about these all-time highs, typically when you see a jump, like let's look at this, for example. You see, actually, before we start looking at that, let's zoom out and notice this was kind of the peak that it hit. It hit a peak back here in the beginning of 2024, right? It tried it again, probably in July, August, tried it one more time in probably September, and then it separated. And that's great. It jumped. It was able to break through this resistance point. That's something that you like to see sometimes, but you don't like to see it when it jumps up here and the volume is relatively weak. Now, if we just look at this, what is the volume doing over here? You can see this volume, this average volume line, this yellow line. You notice that it has that kind of downward trajectory, very slightly, but it's a downward trajectory. So in a way, that can be a bad thing. Why? Because if you have a big jump in a price and volume starts to kind of decimate, it starts to just kind of wither out, right? What's going to happen to the stock? Well, the stock's going to typically come gradually down, but we're really not seeing a drastic decline in volume. And if you just notice here, probably starting right around here, this was last year, you do notice that it kind of just continues to wither down. So volume is there's just less volume in the market. So it's not really something specific to Visa. So I'm okay with that. Now, what do I really like about Visa? I like that we're kind of getting this consistency in volume. You're getting consistent volume every single day. What does that mean? That means that even though we're not hitting average volume, we're still getting a consistent amount of volume every single day. So you are able to continue to climb forward because it's not something like this. Big volume one day, weak volume the next, weak volume the next, big volume the next day, moderate, weaker, just decline. You have this consistency. So it's pretty much the same almost every single day, maybe within 10 to 15% of each other. Now, let's hit on the other side of this. I said it's not hitting average volume. When you're making all-time highs and you are trying to break through new levels and stay at those new levels, what do you need? I've said it a billion times on this channel. You need to have a lot of volume. We're not necessarily getting that. So why do I think this is a good opportunity? Well, I look at this one way. You can continue to trade this up, which is great. The stochastic is with you. You do have a little bit of buying volume. You hit a peak today and you kind of ran back down. Great. You can swing trade this. Now for me, I'm probably looking at this to go short. Why? Because of that volume. Weak volume means that a stock is going to come down. Now, is it going to come crashing back down? No, probably not. But it's going to gradually start to slide. So if I just take this, actually, let's blow up the daily chart. Let's blow up the daily chart and say, what are we going to see? Well, we're probably going to see something that kind of shakes down like this. And it's going to hit the 25-day moving average right here. And it's going to probably buckle around a little bit. And then it's going to start to fall. And it's going to run into resistance here. And I'm going to just continue to just follow it down. You have a gap to fill here, right? You're going to probably accelerate through the gap, and you'll probably come down to $295 a share, somewhere in that ballpark. To me, this looks like a really good shorting opportunity, but in the interim, you can go ahead and swing trade it. And that is the beauty of a stock like this and why Visa's on a watch list for me. Now let's go to the next one that I see here. This is John Deere. And you're probably thinking, John Deere, where do you get John Deere from? It was a community stock that somebody sent me, but look at this, guys. You had a beautiful swing trade up, tons of volume. Yes, earnings were involved, but tons of volume. The price started to come back down because, again, you hit a peak up here. What happens when you hit the peak? You need to have sustained volume. The volume needs to continue. And what happened here? Spike in volume, less. And you see what happens? And as soon as you start getting less volume, what happens to the stock price? Well, it starts to trickle down. And then you have that consistency in volume. But what do you notice? You're still not hitting average. So the price continues to trickle down. I hope I'm putting all of this together for you. This is a great example. Now, why do I still like John Deere? Well, Deere has back and forth volume, meaning buying volume, selling volume, buying volume, selling volume, buying, selling, buying, selling. Nobody can choose what to do. And what happens when that happens? Well, the stock doesn't really move. It stays consistent. It consolidates. It's hitting the 25-day moving average. The stochastic is on the bottom. So what's going to happen next to John Deere? Well, probably it's going to move up like this. This is a swing trade. It's going to move up like this. Just like you swung it down, you're going to be able to swing it back up off the 25-day moving average. And then what's going to happen? Well, at that point, you're going to have an ugly face pattern. What's an ugly face pattern? It's when you have a left side peak, and then you have a dip, and then the stock price is going to come up. You're going to have a right side peak, and it kind of looks like a face, right? It's kind of ugly. Bearish signal. What happens after that? Well, it comes right back down, and it's probably going to hit 25 again, and you're just going to be able to do this over and over, just following the stochastic up and down and up and down. That's why I like John Deere right now. It is at it's in a very good consolidation channel that it's going to probably bounce between 469 and 439, and you could just make money going up and down the entire way. Now, let's go to another one, Target. Target recently had a big fall, and when I say recently, November 20th, so about a month ago. About a month ago, they reported earnings, they had a big fall, right? Well, they've come back up a little bit. They're still not back up here to 155. They're at 134 right now. And you notice they're running into the 25-day moving average. Just like John Deere was coming down and hitting that 25 and kind of, I said that's the consolidation channel. This is the same thing on the other side. So when you get something that it runs up like this, it hits the 25. Actually, let's zoom in even closer here. You basically had 1, 2, 3, 4, 5 solid days out of 7 right in here that you've kind of ran into the 25 and you can't break through it. And today specifically, look at this. See that long wick on there? Let me get rid of my arrow here, or my whiskers. See that long arrow wick right there? That basically hit the 25 and it pulled right back down. You're going to have that. If you don't have volume, which you don't have, you're going to hit the 25 and you're going to come back down. So for me, I'm looking at this saying, okay, I can turn this into a swing trade. I can look for an engulfing candlestick that takes out the low of Monday, and stochastics on my side, get some selling volume, sell it, see if I could fill this little gap right here, take it down to 122, 123, whatever the number is, and then what? And it's the same thing with Deere. Swing it back up to the 25, swing it back up to the 25. You're going to create a consolidation channel where the trend just moves up and down through that sweet spot, and you're continuously making money in a consolidation channel. It tells you when to buy and when to sell. All right, let's do a few more before I give you my top ranking. So here we go to Micron. Micron, why is Micron interesting? Well, it's talked about a lot, right? But what do we notice here? So before I do anything as far as looking at candles, whatnot, I just want to draw a couple of lines here. And I'm going to draw a yellow line that kind of goes across here like that, right? It's kind of, you hit these peaks. So there's a peak right there. There's a peak right there. There's a peak right there. We're kind of getting to that peak, and not really, but we're kind of getting there. And then there's a peak on the bottom, or there are troughs on the bottom, I should say, consolidation in here. Are you seeing a pattern of recurrence here? Again, you're in a consolidation channel. You can swing it up and down. That's the beauty of these stocks that I'm picking, is that you can go in both directions, and they're both moving with pretty good conviction going both directions. So this, of course, has earnings that are coming out later today. So we won't be trading it today. We'll wait until after earnings. But I have a feeling it's going to stay in this consolidation channel unless something crazy happens. But we are just going to be able to run into the 200-day moving average, which you've consistently done. That hasn't been the 200, but it's been these all-time highs, or 52-week highs, I should say. And then you're just going to do the same thing, run it up and down. And how are you going to do this? How are you going to follow what the stock is doing here? Well, you're just going to follow the trend. As the trend goes down, you short. As the trend goes back up, you go long. As the trend goes short, you go short, or the trend goes down, you go short. It's very, very simple to start seeing these things as you practice, as time goes on, as you continue to find examples like this. Another one. Let's go to Netflix. This is a very, very highly attractive stock right now. Previous all-time highs were back here at the end of 2021. They had a great fall. Everybody thought they were dead back here. I remember Bill Ackman, great hedge fund manager, who I respect a lot, started exiting down in here saying it's over. He actually exited. You see this gap right here? He said, it's over, it's not going to work, and then you've seen the explosion. But look in here. Couldn't break through. And this couldn't break through level, this resistance level, was from June 20th, 2024 through October. So June through October, you were not able to break through this all-time high at the time, and then we have since exploded. Let's see. Is the explosion worthwhile? Good consistent volume. But you notice here, not hitting average volume. Even here over the last couple of weeks, not hitting average volume, not hitting average volume back in here. What propelled this stock price to go like that? Well, if we just come straight down here, look at this, increase in volume. Increase in volume does what? Increase in volume pushes you to new highs, 52-week highs, all-time highs, what have you. Back in here, again, you can still see it. You were all the way down here. You got a little increase in volume. You were hitting average. What happened to the stock price? It ran up. So you can see how important volume is to propelling stocks to new highs. But you have to stay there. You have to sustain it. And to me, Netflix is not doing that. You can see a lot of selling volume in here over the last couple of weeks. You can swing trade this back down, but let's go over to the long-term chart. Let's see what it is. My guess, and I haven't looked at it yet, my guess is that it's still long, but we could probably look at it to go short, and it is. It's a power stock right now. It's overall, it's over the 4 major moving averages, almost at new highs. What am I waiting for here? I'm going to be patient with this one, and I think that this is a very important level. I think that Netflix will continue to break down, go from 915 to maybe 850. And as soon as it breaks through 850, what's going to happen? Well, your trend will be down here. And this right here was really a flagpole. So what happens with flagpoles? Typically, stocks will accelerate through. So I think you're going to get candle, acceleration through down to this little trough area around 760, 750, whatever that number is. So these are a couple of things that I'm looking for with Netflix that I'm going to say, you know what? If these things work out, then I'm going to pay attention to them. But I still like Visa and Deere better. Netflix is on here because of the potential that it has to go short. I like paying attention to some of these hype-ish stocks. This one's not really in the Magnificent Seven. This was a FANG. FANGs are kind of no more. So I like paying attention to this because it's almost your second tier of big stocks, big hype that I like paying attention to. Doesn't get as much volatility as an Nvidia, as an Apple, as a Tesla, but it gets enough that the stock price is going to come down, but it doesn't get enough that it's going to happen like that in a single day out of nowhere. All right. Now let's go to some of my top ranked stocks that I like trading right now. Zim I have shorted multiple times over the past, 3 years. Why? I was able to catch Zim back in here, ran it all the way down to here. And then recently I was able to catch Zim going short here, and going short in here. Why? Well, let's look at this. If we go back to 2020, 2021, whenever this IPO was, you realize there's kind of that. Now, we didn't know the rest of the chart, of course, but back at that time, this was kind of your first resistance point that it ever faced. Well, you draw it over. Here was your base. Then you had consolidation in there. Then you had a peak here after a big fall. You ran up. Here was your peak. And then what happened? Here was all this consolidation. And what do you realize that's on top of that consolidation? I can probably just draw a straight line right across. It's not very straight. And it's going to hit all of those levels. And it's going to hit this trough right here. Yep, there it is. So I realized that anytime Zim were to hit this yellow line that I drew, it was going to come right back down. And I executed based on that. Broke some rules, went with it, but that pattern was so strong. But what do I see if you're actually following the rules? I'm actually in Zim right now. I'm still short on Zim. I think it can come down to this $16 level. The trend is absolutely perfect. But what is the most important thing that we're looking for? I'm not telling you to get in this trade right now. I'm telling you to watch for it in the future. Well, let's get down to 16, and then what's going to happen? It's going to bounce off 16, and what's it going to do? Well, it's probably going to go back here to $23, $24 a share, and the trend is going to go like that. And what's going to happen after it hits 23 or 24? Well, it's the same story over and over because the volume is not there to push it to these highs. Is it able to peak to highs? Peak to all-time highs? Or 52-week highs? Yes, of course it is. But can it sustain it? No, can't. Unless there's volume, unless there's a lot of buying volume. There's not. Look what happens. It falls apart. So I think that you can trade this between 24 and 16 over and over and over again. And it's not going to happen fast. It's not going to happen in 3 days. It's going to take time. It's going to take a month. And that's the beauty of the long-term chart or the weekly chart. You can run this thing for a month at a time, going up and down and up and down. Another one of my top favorites right now, Carnival Cruise. And you're probably looking at this going, Carnival Cruise, I haven't heard about Carnival Cruise since it was back here when it was $60, $70, $80 a share pre-COVID. I know it fell apart. It did fall apart. But what happened when it fell apart? Something that was called a 50% rule was created. So what's the 50% rule? Well, if you look at this, let's just look at this box right here. Okay, this is the box we're focusing on. Well, you have kind of, I'll draw two things. You have your high, that was kind of your high before the big fall. You have your low down here, which is kind of the bottom. And then you have an area right in the middle of the two, right there. And that's about 50%. 50% of what? 50% from the low. So here's the concept behind the 50% rule. Here's your high, here's your low, here's about 50%. So all these people here, $55 a share. All of a sudden, one day the stock price starts falling rapidly. The stock price really starts falling. It gets down to here. It went from basically, let's just call it 60 down to 8. Well, these people are saying, man, if I could just get half my money back, I'm out of this thing. And what happens? The stock price rallies up. It gets to about $30 a share, maybe $27 a share. And people, what do? They sell. What happens when they sell? The stock price falls back down, right? And these people that didn't sell here, they say, you know what? If I could just get half my money back, I'll be happy. And look what happens. Runs up, does it again, does it again, does it again. Everybody's just trying to get half their money back. And what do you notice? A very strong resistance line is being created. All of this area up here, this is all called overhang. Overhang is negative pressure just pushing down on the stock. Computers are selling when it hits 50%. Everybody wants 50% of their money back. And that's why you see this. And what do we notice right now? Well, we just draw this line across. And here's the other line that you could really draw. You could argue that the 50% rule is here, here, and let's see, right about here. You're there, basically. This is the overhang. Well, you're there. That's why I like Carnival right now. I like Carnival because it's probably not going to last right here. So if we just shrink that, blow this up, let's look at the volume, of course, and look at what we have here. The volume is clearly decelerating. You have so many sellers coming in. Earnings are coming out on Friday. So Friday the 20th. So we're going to pay attention to earnings, see what happens, let it go. Even if it jumps up in price, it's going to come back down. Mark my words, it's going to come back down because there's not going to be enough volume to push this thing higher. But I like paying attention to this right now. Let's pretend that earnings aren't there. I like paying attention to this to roll down into the sweet spot, and this thing is going to come all the way back down. I think this is going to come back down to $19, $20 a share. It's very possible that it comes back to $15 a share. I love the setup that I'm seeing here on Carnival Cruise right now. Absolutely love it. It's probably my favorite one that I'm paying attention to right now. The next one, Starbucks. Starbucks, you're probably saying, well, they got a new CEO. They're not going to charge for milk or dairy upgrades anymore. Everything's going swell. Well, I've been paying attention to Starbucks since it was up here at 102. I have a note over here to go short on this thing, and it's about time to go short. I want to go short here when we break through the resistance level we're at. So you notice here, guys, I always zoom the chart out, zoom it way out. See where the resistance points are. It doesn't matter how far you go back. I've gone back to 2008, 2009. With AT&T and stuff, you're going back to 2002. Something like this, we're going back to 2019 here. So let's look at it. You realize you had this kind of there. You had consolidation in there. You had a peak in there. You were stuck there for a while in 2020. Stuck there for a while in 22. Stuck there for a while in 22. Here was your bottom in 23. Here was your bottom in 23. Here was your bottom in 24. And you're there right now. So this plays a significant level of resistance. That's the point of me drawing all of this out. Now, we don't have any buyers. The buying volume is gone. So we're good. So now we just have to figure out, when do we enter this thing? Well, we enter it when you take out the low. So if I just draw that line, and again, I'm going to draw it with pink here. That's our line. You just need one more day. One more day can give you everything that you need, because then this thing is just going to break down. You will move into the sweet spot down here, and you will be off to the races. Starbucks is a very, very good opportunity right now if you exercise patience at this let's call it $90, this $90 support level. If it can break through that with some volume, it is going to accelerate down to possibly $70 a share, because this is a big gap right here. This gap, what's going to happen? It's going to accelerate right through the gap. It'll get to about 83, 82.50, and then it'll probably march its way down here into the 70s. This could be a very, very good trade. So to recap my top three: Zim, Starbucks, and Carnival Cruise. Guys, I made a great course on everything that you need to know about trading. It's about 2.5 hours long. It's chaptered. It's literally everything that you need to know to become a really great trader. It is a great study tool. Click this video right here. I know you'll enjoy it.